When investing was thought to be beyond reach for the ordinary Joe just a few decades back, peer-to-peer lending arrived like a beacon of light, bringing great earning possibilities to everyone, even individuals who had never dabbled with investments before. Hello and welcome to Upstart Financial. Be part of this channel by hitting subscribe and clicking the bell icon to be notified every time we have an upload. If you can't obtain an affordable loan through a typical bank or credit union, a peer-to-peer lending firm or a similar lending platform is worth investigating. What exactly is peer-to-peer lending? Peer-to-peer lending, often known as social or crowd lending, is a type of funding that connects people or companies wanting to lend money with people or businesses looking to borrow money. As an alternative to traditional funding, a financial tech company develops an online platform that directly connects loan applicants with investors. Your interest rate, terms, and whether you qualify in the first place are still determined by the same variables that other lenders evaluate. If you have strong credit, an approved stream of income, and a low DTI ratio, you might be able to get a good deal on a peer-to-peer loan. However, obtaining a reasonable loan offer may be difficult if you have credit issues or other borrowing problems. Peer-to-peer loan companies, as opposed to traditional lenders, engage with an individual or corporate investor to support business and consumer loans. Now, let's get to the important stuff. We have put in a huge amount of effort to identify the top peer-to-peer lending platforms. There are several excellent options, and new ones emerge on an everyday basis. Let's start with the first one, Peerform. Peerform's unique technology is used to evaluate candidates who may be more creditworthy than standard credit scores indicate. Because it offers an alternative to payday loans and other predatory financial products, such as fee-laden credit cards, Peerform stands out among its rivals. In addition to its willingness to lend to customers with poor credit ratings, it's a wonderful choice for people with great credit as well. Peerform's best rate of 5.99% is the lowest you can find for a peer-to-peer or platform lending company and quite suitable for any personal loan, and its maximum APR offer of 29.9% is also low. As a downside, however, Peerform does impose fees, such as 1% to 5% origination cost, as well as a 5% late fee. Some lenders do impose these fees, but not all do. Additionally, Peerform's personal loans are only accessible for a period of 3 years. So, although there are no fines for paying off your loan early, you will be out of chances if you need to extend your payments. Upstart. This unique financing platform looks for borrowers with potential based on academic and job qualifications, even if their credit records are inconsistent or poor. Upstart's tagline is, "You are more than your credit score." And they truly mean it because you don't even need a credit score to get funding. However, if you do have a credit history, you'll need at least 600 credit score. In return for providing unconventional details such as the university you attended, your field of study, or who you've worked for, you may be able to get a cheaper rate than you would from a typical lender. Upstart may be an excellent option for young, first-time borrowers such as fresh college graduates. It is one of the few lenders offering affordable rates that while promoting a willingness to consider candidates with no credit history at all. Furthermore, Upstart's lowest APR is low, and there are no origination costs for borrowers with outstanding applications. However, not everyone will be accepted for such competitive terms. Upstart has a very high maximum APR and charges certain borrowers within origination costs of up to 8%. This is 2 to 3 percentage points more than the maximum evaluated by others on this list. The lending site also does not allow cosigners, which might mean you'll be left with a hefty interest rate, depending on your creditworthiness. Prosper. Prosper provides loans for a variety of purposes, such as debt consolidation, home renovation, and medical expenses. Like Upstart and Peerform, the lender has a unique approach to underwriting that goes beyond standard criteria. Borrowers can receive as little as $2,000 or as much as $40,000. Prosper offers a variety of interest rates with a maximum APR of 35.99%. However, unlike other competitors, Prosper allows you to apply jointly with another borrower, providing you the opportunity to get cheaper rates, presuming that borrower has better credit. Prosper also charges fees, including a loan origination fee of at least 2.41%. This is important since a few percentage points can add up. A percentage point added to a $10,000 loan, for instance, adds $100 to the cost. Payoff. With Payoff loans, you may refinance high-interest credit card debt at the most affordable rates among online lending platforms and peer-to-peer lenders. However, a Payoff loan cannot be used for any other reason. Payoff has rates ranging from 5.99% APR to 24.99% APR. Payoff loans range from $5,000 to $40,000, so you have plenty of breathing room to combine all of your credit card debt and make payments on time. In addition, Payoff is particularly notable for its flexible payback durations and free of fees. The only fee Payoff would impose is an origination fee, which can range from 0 to 5%. Upgrade. Loans as low as $1,000 are available through this lending platform, which is one of the few online personal loan lenders eager to provide small loans. The most creditworthy customers will receive an APR of 5.94%, which is lower than what another traditional lenders charge. On the other hand, Upgrade may provide an APR as high as 35.97% for less creditworthy customers, which is at the top end of our list and particularly high when compared to other more traditional banks and credit union offerings. Furthermore, origination costs range from 2.9% to 8%, which is greater than the majority of our other top selections. Because origination costs are taken from your loan amount, an 8% fee would add up $80 to $2,800 of your loan amount. Even a 2.9% fee adds up. Funding Circle. Funding Circle provides loans to small company owners that require them immediately and works with fair credit customers. Funding Circle was formed in 2010 and currently has 100,000 investors. The company has assisted 90,000 small companies in seeking funds to help them achieve their objectives. If your company has been in operation for more than 3 years and you have a FICO score of at least 660, a peer-to-peer small business loan from Funding Circle may be worth pursuing. Investors purchase notes with terms ranging from 1 to 5 years and get monthly installments. To begin, you must deposit at least $25,000 into your Funding Circle investment account. You may then assign that $25,000 to fractional notes in $500 increments. If you want, you may select your own notes or allow the platform's auto investment feature to make the decision. Annual interest rates are expected to range from 4.5% to 6.5%. You can choose between a balanced lending approach, in which you lend to a variety of creditworthy businesses for a projected annualized return of 4.5% to 6.5%, or a more conservative approach, in which you lend only to lower-risk businesses for a projected annualized return of 4.3% to 4.7%. A 1% maintenance fee is charged. To prosper with peer-to-peer lending, you must first discover the appropriate peer-to-peer lending site that matches your investing objectives. That is the first thing you must determine, as most peer-to-peer lending platforms are either focused on one or the other. Moreover, you'll undoubtedly feel a bit overwhelmed by the sheer number of investing options. It's for this reason that you must take every decision with a clear head. We'll be ending with that. So if you like today's video, go ahead and give it a like, share, and subscribe to the channel. We'll see you in the next video.